Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with his good friend, Adrian Hernandez. How you doing, buddy?
Happy Saturday, everybody. Live, excited, full of energy, ready for the call, man. I love my Wednesday mornings.
Oh, I do. I love it. I got to tell you, just talking to you just makes me smile. You got a positive energy. It's just amazing. So thank you for all you do.
Let's go. Thank you.
Hey, so the first thing we are likely going to talk about for the next year, I can see our future, is the Orange County market. I've been doing this a long time. I know nothing about Orange County, but I happen to live in a market like Orange County, right? 7-figure median, high income citizens. And I got to tell you, I think our market slammed into a brick wall, and it is slowed down almost like a light switch. It's slowing down. But again, what's going on in Orange County today?
Yeah. Well, if we look in the last 7 days, in my particular South County corridor that I'm focused on, we had a total of 71 new listings. This is in the last 7 days, guys. Okay. Check this out. 55 of them had a price reduction.
Wow.
55 out of 71, which is interesting. And
That's
only
nuts.
36 went pending. And what's interesting is 10 canceled.
Interesting.
We're starting to see a lot of cancellations.
So just so I'm clear on what you think of cancellation. I mean, you'll never know, but I'm going to guess the best reason for a cancellation is they wanted wish pricing. They didn't get it. They took it off the market.
Yep. That's exactly what's happening.
Like I've done this before. I'm so good at this.
That's exact. Now it's interesting in certain areas we're still seeing, and you know, what's interesting, the high-end market, Zuber, like 2.5, 3.5, even 4.5,
right,
is still moving.
Well, those people got cash. They don't give a rat's ass about interest rates.
Which was my point.
They don't care. I don't care.
When you're looking at a certain demographic at Orange County, the market is still running strong. But when you look at that 950, that million, the guy who's 1.2 that wanted 1.7 could have gotten 1.75 months ago is not getting 1.7 anymore. Or they're staying on the market 60 days from what we're noticing, right? This is from when you and I first started having these discussions. What would that be like?
4 months?
4 weeks ago?
Oh, no. Yeah. About the market. 4 weeks. Yeah. Just 4 weeks.
You've been talking about this for like years, right? But if you look at the last, and I've been studying like just the last 60 days.
Yeah.
It's interesting to see how many properties have been on the market for the last 60 days.
Exactly. This is what a real estate slowdown feels. And I got to tell you, I've been talking about the real estate slowdown in detail for 6 months. I got to tell you, there's a lot of California agents, and some of y'all are in Orange County because you blow up my comments and called me an idiot. How's that brick wall feel? Right? It was coming for all of us. You can't have rates go up 350 basis points, and anybody who needs a loan, even if you're getting a 70% loan, right? You've got 30% cash. Your interest rates have doubled. That hurts everybody. And if you're talking about a $900,000 mortgage, that's like a 12 or I don't know what it is, $9,000 payment. How many people really want a $9,000 payment? It's nuts.
Yeah. And you're seeing like, you know, the entrepreneurs, the business owners, the people know that they're going to make more money. They're buying, right? And that's what we're seeing in that 2, 3. They understand that. But anything that we're in that right in that median price point, it's just interesting. It's staying on the market longer.
It is. And again, why is that? Well, there's two things going on. And this is why being an econ, somebody who studied econs and got a degree in economics is awesome. It's because of demand. And what people don't realize, Adrian, is demand is a 2-step function. A, you have to want it.
Right.
And then B, you have to be able to qualify. What have we seen happen in the last 100 days? Well, everybody's talking about demand destruction because less people can qualify. I have to tell you, the bigger issue that no one is talking about is people are scared.
Yeah.
They're scared. What if I or my wife or my husband lose their job? We both work in tech land. We both work in finance. We both make 6 figures. We both could easily afford it if we stay employed. But my company's a little tight. We didn't raise enough money, or our income is going down. Our CEO is saying there might be this or might be that. We are seeing the first step of demand destroyed, and no one is talking about it except this channel. People are scared, and that is why expensive markets like the Silicon Valley and Orange County are going to get smashed. Activity. We're not talking median price or any of that. Activity is going to stop. People are scared. It's just where we are.
Yeah. And then some of them are smart and see what's going on and they're just holding off.
Yeah. They're like, oh, right.
So,
yeah.
And then you look inland, right? Inland's a little bit different.
Oh, different price point, different market.
Different price point, different market. It's still moving in some areas, but again, we're seeing cancellations. The biggest thing I'm seeing inland with all of our flips is cancellations. We have one property. It's been in escrow 3 times. They just canceled again yesterday, right? Because of qualifying factors. And then, we call the agent and the agent's like, well, dude, that now they're not going to be able to afford it. Them looking 30 days from now. And it's interesting to see what's happening in the inland markets, because it's not just one of our listings, it's most of them. And I was having this conversation with Omar yesterday. He's seen the same exact thing. He's having to do price reduction and give closing costs. Yeah, which is interesting.
He's getting aggressive. He is definitely trying to clear the decks a little bit, which is the smart move. Again, I saw somebody who was flipping more in an Orange County market that didn't take a 50K loss last time, and he lost his whole portfolio. So clearing the decks is important. But again, I love talking to you because Orange County and Inland Empire are very different. Orange County, for me, people are they're afraid. It's more like a pause. It's like, oh, whoa, something changed. Let's see what things are like in 6 months. Right. Inland Empire, very different. There's a qualification problem, right? Incomes are stretched. Same deal, right? One of them loses their job, they can't qualify. It again, what have I been telling? It's the time, if you are going to flip, stay below the median. Don't do any of these 2x median stuff. Some of you flippers aren't listening and you're going to get smashed.
Yeah. And same thing with wholesalers too.
Oh, agreed. It's the same answer. Yeah.
If we look at wholesaling in a nutshell real quick, we're seeing cancellations. We're seeing, investors coming back saying, you're crazy if I'm paying that. Yeah, we're seeing investors coming back saying, hey, honestly, how much are you making on this deal? Because I'm only making X amount. So I think wholesalers are also you guys are in for an awakening over these next few months, because your $60,000 paychecks are now going to be going to $15,000 paychecks. It's not just the real estate agents and buyers that are going to be hit by this, guys. This also is all of flippers, especially flippers. Like, I think if we don't have any other exit strategy, if it's just a flip, we're going to have a problem, just like wholesaling, right?
Yeah. So I just want to close on that one stat. You talked about 71 new listings in 7 days, just so I have kind of clarity. What's a normal market? So think 2019, if you can go back there. And then more importantly, what were we during the pandemic? I have no idea.
So 2018, 19, this is pretty
okay.
normal.
So we're back to relatively normal.
This is normal. Pandemic, nothing was for sale. But and then right after that, after the pandemic last year, it was insane, right? We were seeing properties. The problem is we would have like 50 new listings come onto the market, 0 price reductions, as we all know. Yeah. Right. So we are seeing, and the way I'm relating Orange County is like 18, 19, and Inland Empire like 15, 16.
Oh, I think that's fair. I would do that too. Yeah.
15, 6, somewhere around there. Maybe even 14, because 16 started to pick up a little bit. We're like 14 where you actually had to work for it.
Yeah. Yeah. Right? I really do think real estate agents, we're going to talk about this in video too. I have a strategy that I'm using that I want to double pay real estate agents in my market. You can have both sides, 6% or 5%, whatever it's in the listing. We're going to talk about that in video too, because I want to pay agents to help me find deals. Yeah. So we'll talk about that. But yeah, the market is changing. I am ecstatic because what have I been waiting for? I've been waiting for a slower market. It's here, and I'm going to have it for the next 2 years. So I'm excited.
Another thing I'm seeing is they're paying attention to what they bought the property for.
Yes.
Where we live, there's a house for sale, and the houses were going for 1.4 million when they were built. Okay. That was 2 years ago. They're selling right now for 2.5 to 2.8. Okay. So about $1.4 million change in equity. Woo! Right. Yeah. The guy up the street listed right as the market, right when it started to change about a month and a half ago, got 2.65. Neighbor came on the market 2.5. It's been crickets for the past month. And I speak to the buyers that are going to the house, the agents, and they go, everyone knows what they paid for these houses, right? It's only the guy up the street that's paying for it. Everyone's paying attention to it. So we start asking the same thing on our flips. Everyone's paying attention to what we're paying for it. So I think also everybody, because this is now all over Instagram and people are more in tune with the market and real estate, because real estate's been so trendy for the average person over the last few years. I don't say the average person before, you know, the normal person at home. It's been very trendy. Those that didn't know about it now know about it. And I think we're much smarter. I think the consumers are a little bit more smarter than they were in 2000, 2005,
right.
2004. I don't think I don't think there's still naiveness out there, but I don't think it's as much.
No question. Access to information is powerful. And this is what happens in a changing market. If you don't change, if you are so arrogant that you think your one strategy that worked for the last 2 years and you don't change or hybrid or create additional, you're going to lose. I promise you're going to lose, and it's going to be spectacular, and you're going to woe is me, and it's going to be your own fault.
Yep.
So Adrian, where can people find you?
Instagram at Adrian Hernandez, YouTube, Adrian Hernandez.
Awesome. Thanks, buddy.
Yeah.